I am live. Good morning. Good morning. Good morning, South Florida. Hello, world. This is Robert Henderson Jr., live in the beautiful studios of the Henderson Financial Group located here in Miami Lakes, Florida. I'm flying solo today. Yes, my wonderful, talented sister in law, Linda V. Harris, is not joining me today, so I'm going solo. And for our second show, we won't be having it because James T is on assignment. He won't be joining us also. So we're just going to have this one show from 9 to 10, and I'm going to go solo. So I don't have any interruptions, and we can call this Education Saturday. Today, I want to talk about reverse mortgages, but reverse mortgage strategies. So what I want to do in order to explain it to you, because a lot of people don't understand reverse mortgages, especially a lot of people of color, they get the wrong understanding of how to use a reverse mortgage. People that don't look like me been using reverse mortgages for 50 years, and they've been prospering and really working that thing to the bone, so to speak. And you know, most people just don't understand how to use it. Any instrument that you have, if you don't use it well, it's not going to perform well, or you're not going to like it. Reverse mortgage, I'm going to explain it to you guys in like a story form. I'm going to tell you a case. Matter of fact, a case study. And I want to explain that to you. This is a real case. And I want to back into explaining to you how to use a reverse mortgage and how it can really best serve you, and use a real life case with a young lady. Okay. And if you want to do a reverse mortgage, if you like what I'm saying, at the Henderson Financial Group, we can help you. We structure, well, actually, we provide you services and guide you. And then we look at your situation and see, is it a good fit for you and will it work well? We like doctors, like financial physicians. We want to analyze your situation, then we want to diagnose it, and then we want to prescribe financial strategies. That's how we do it. That's why when you first come in with us and start working with us, we know if you're serious if you will at least fill out the paperwork, fill out the documentation, so we'll know exactly where you are financially. Some people don't want to do that, but that's like going to a doctor or a dentist for the first time, and you're sitting in the lobby, you've never been in there, and they never met you, they don't know anything about you, and you're at a dentist's office and you say, oh, I got pain in my tooth, and they give you the little clipboard and they say, okay, we want to get some information on you. Are you allergic to penicillin? Are you allergic to Novocaine? When is your last X-ray? And you said, no, I don't want that. I just want to see the dentist. It's going to be hard for the dentist to really analyze where you are, diagnose your situation, and prescribe a strategy, and not take X-rays. It's pretty tough. So that's why we require some documentations from you, so we'll know exactly who you are, and get some sort of snapshot where you are, and then we'll go into the counseling session and talk to you to help prescribe a strategy for you. And that's just the way it works. So if you call the Henderson Financial Group and you say, listen, I got a situation, but I need some help, we're going to need X-rays. In other words, we're going to need paperwork, and if it's something just quick, that you just need some information and don't require all that, it's okay. And if you're an existing client, we already have your file, we already have your data. We know your date of birth, we know if you're married, we know if you're divorced, we know how many kids you have. We already know that. So once you get on board, it's much easier when you call in and you got a situation, and we need to help you to navigate through it. Okay. All right. So grab a cup of coffee or tea or whatever you need to do, because we're going to learn today. And I think, matter of fact, I have found that telling stories or walking through a case, doing case analysis, that you can learn a whole lot. Because a lot of times when financial advisors just bring up these fancy jargon words, vocabulary, terminology that most average layperson don't know anything about, it can become confusing. Words can get in the way. So we like to teach not only with words, but really we like to teach with understanding. And all you'll get in the good book says get understanding. Okay, so I hope you all. How you doing, Miss Redhead, Mr. Redhead? Good to see you. I got an appointment with you later on today. I work every day but Sundays, and man, this time is going so fast. I cannot believe Christmas is, next Sunday. It's amazing how time is just going by. It's just like just going. I mean, there's nothing you can do to stop it. I don't care what situation you're in. It's going fast. I've been saying this 20 years ago that the universe was speeding up. This thing is going fast. The globe is spinning faster and faster. So if you haven't done nothing, if you're not planning before you know it, the situation and the time has come upon you. So you got to get ready. You got to plant your seeds. You got to dig in. You cannot waste any time. I'm telling you, you can't keep putting things off and saying you're going to do it later on, because before you know it, later on will be here right now. And but the Henderson Financial Group, our motto is we plan, we take you. No, our motto is we like to take you into the future now. So in other words, we want to plan right now. Whatever we're doing right now, we plan it because the future, because it's coming so fast, man. The future is coming fast. It's like if you're in a car, you're going 200 miles an hour, man. Before you know it, you're there. I mean, it's coming fast. So you have to plan now, and you have to dig deep and plant your seeds. And for those people who said, it's going to take a long time for this investment or this plan to take place, if it's 5 years or 10 years, I'll tell you something, before you know it, it's already 10 years have passed. Because if you don't believe me, all you have to do is look as evidence. You can remember 10 years past. Now, here it is, 2022. A lot of us can remember 2012. It's not like that was in the third grade. We can really remember. So if you know that you can remember what happened in 2012, 10 years ago, just imagine 10 years ago going forward. So if you messing around and ain't doing nothing, not planting seeds, afraid, talking about, something's going to take too long, before you know it, that too long will be here today. And if you don't save and plant, you can always be a day late and a dollar short. Y'all heard that? That's what I mean by a day late and a dollar short. Wealthy people understand time. Wealthy people, I'm going to say that again. They understand time. Time is on their side. Wealthy people plan for 30 and 40 and 50 years. Broke people just want it right now. That's all they can see is right now, right now. And that's why they always late, because right now is you always late, because the future continuing time is moving. And if you're spending your money and not investing it right or planning right now will be upon you, and you have nothing to show. All right. All right. So today, thank you all for joining in. How you doing, Terry Green? Cousin Terry, cousin Chris. Got Tara, you and Neil. Happy to see you. Okay, yeah, it is happy Saturday. Y'all see I'm riding out solo. Pete, you see I'm riding out here solo, so Linda don't have to interrupt me. We're gonna miss her today, but she'll be back here next week. Curtis Kegler, how you doing? Brenda Moore, LJ. All right. Gangs falling all in here. Y'all just getting here at 9:10. Y'all waking up late on a Saturday. I'm supposed to be getting up 4 or 5 o'clock in the morning, man. I mean, I woke up at like 5:30. Just couldn't get back to sleep. Just woke up, But that's okay, because sometimes I sleep late on the weekend. Wake up at 9 o'clock. So, but anyway, y'all get a pass because it's holiday season. Okay, so today we're going to talk about the strategies of a reverse mortgage. Now, I'm going to take you through a case, and I want you to find yourself in that case, or I want you to be able to look at this case like we're scientists together. And then I want you to be able to apply this to someone or help someone. Just tell them the story, okay? Okay, so this is a real case. Okay, so it's a young lady. She's in Florida. And right now she is 62 years old right now. But 5 years ago, she came to me and she didn't want to work anymore. Okay, she got laid off her job. She had enough assets that, she'd be okay, because she had a house, still have a house, and she has a rental property. And her rental property is all paid off. Okay, so recently she came and she says, Rob, property taxes in Florida is doubled. Insurance, homeowners insurance in Florida has doubled. And that's true. Man, I just got my notice for my homeowners insurance, and it went up. It went up a whole lot, Last year they wanted to triple it, but then I fought and found a company that, I got a decent price, but it still had went up a great deal. So I just got my renewal, and it has increased. Now, I thought it was increased. I thought I was happy because, what it increased to, I was happy about that, because I thought it was going to be, $10,000 more at least for the homeowners insurance, but it wasn't. So I said, oh my goodness, what I'm paying now, I can live with that. Because I really thought, because after that Hurricane Ian and that stuff that hit South Florida, man, insurance companies just take total advantage of homeowners. And the more expensive house you live in, it's it's hurting you. But percentage wise, I think if your house is less than 700,000, I think they really hurting you too, percentage wise. Even though a house is more than that, $1 million or more, we pay more. But I think in the percentage wise, I think that people that have homes that are not as high, I think the percentage wise you're paying more because in America in life, the rich always get richer. There's never been a time in the history of America where the rich did not get richer. And that's why they're not so quick to change the system or the way things are because it's working for them. I mean, whatever it is, it's working because, like I said, rich keep getting richer. So whether it's Democrat or Republican, whoever, rich still getting richer. Okay, because you got rich Republicans and rich Democrat and rich independents. Okay, all right. So anyway, so let me go back and let's talk about the strategies of reverse mortgage. I know the time gonna go by so fast for you know it's gonna be 10 o'clock and I'm gonna be out of here. Okay. All right, so let's go. All right, so look at this. Look at this. I'm gonna give you a visual and I want you to follow me. Okay, so you got a 62-year-old, and she says, Rob, she hasn't worked. She says, Rob, listen, my homeowner's insurance is doubled now. And I'm gonna be paying more, and you gotta help me out. And you gotta figure out because she says she wants, you know, she wants to be living off at least $3,000 because she don't want to work. And nothing wrong with her mentally, I don't think, maybe slightly, because I can see you don't want to work for the man. But if you need more money, and I've been telling her for the last 5 years, you need to get a part-time job or something. I mean, just make $1,000. That's going to help you in terms because if young, you may live to 85, 90 years old, and the cost of living and inflation is going to be going up. Things are not going to stay the same. You can basically ballpark it. In 20 years, everything doubles, the price of everything. Okay. What I mean by that, inflation wise, between 20 and 24 years, everything doubles. So if something costs $1,000 in 20 to 24 years, that $1,000 is going to be purchasing power in order to pay for $1,000, that $1,000 purchasing power, you're going to need $2,000 in the next 20 years. It's just how it is. That people don't understand it. That's why you have to invest and keep pace with the cost of living. And what I mean by that, in 1976, a stamp to mail a letter was 10 cents. Now it's over 50 cents to mail a letter. I mean, that's crazy. But that's how it is. You're like, hey, what happened if you'd have had that same 10 cents and didn't use it since 1976 and you put it under the mattress and now you want to go mail that letter and you go to the post office with 10 cents, they're going to look at you like you're crazy because the value and the cost of mailing it, inflation has caused the value of a stamp to increase. Okay. If you're a stamp collector, you make some money. But if you're going to use a stamp, then inflation, it costs more. That's the thing with Similac. If y'all had babies back when some of y'all had babies and y'all wasn't breastfeeding, y'all was giving them Similac, it's totally different. That cost back then was like, $1 a can. I don't know what it is now, probably $4 or $5 or $6 a can. That's just the cost of living. That's the way you have to keep pace. Your money has to keep pace with time, with the cost of living. Because bread prices, bread prices, now they just told me the price of eggs, I'm still at the point where I don't go in the store and be looking at prices. Thank God I just get what I want, but I don't go in the store a lot. Natalie does, my wife, and she tells me like, oh my God, this is stuff. I just say I'm going to make more money to rise above all of this stuff. That's my goal. So back to this case. So this lady here, she's 62 years old. So she says, listen, Robert, she says, I want to pay my mortgage off. I says, okay, you have a home. How much are you paying right now? She said she's paying $1,200. She's paying $850, but it's going to $1,200. And she says, I don't want to deal with this, Rob. I said, what's the balance of your first mortgage? She says it's around $100,000. And I said, okay. I see over here you have $150,000 in the savings. Why don't we take the $150,000 and put it in an investment that's going to pay you $1,400 a month, just the interest, just the dividends, and you keep your $150,000. So that means you keep your $150,000. It sends you babies. In other words, it sends you money. It produces $1,400 a month. You can keep your $150,000. It sends you $1,400 a month. You use that to pay your mortgage, and you're good, and you still keep your money. She says, no, Robert, no, man, I don't want to do that. I just want to pay this mortgage off. I say, well, that's not how the rich get richer. Because if you just take out of the 150 you have, 150,000 that you have, if you take 100 of that and satisfy and pay the mortgage off, okay, you don't have mortgage payments, you don't have no tax deduction either, but you don't have mortgage payment, but you don't have the use of that money anymore. And that's just that's not how you grow money. See, we've been taught differently, the wrong way how to look at money. Money's supposed to make money. We just been taught that you get money to spend money. You spend the money that the money has made, but you don't spend the money. In other words, we got to understand the story about the golden goose that laid the golden eggs. That's real in terms of conceptually. She want to sell the goose. Why would you sell the goose? Nobody in their right mind will sell the goose, especially the goose producing golden eggs, because it will produce them golden eggs forever, and you can pass on the goose to your loved ones. But they haven't taught us that. A lot of people who are not rich and wealthy, they always sell the goose. In other words, they always get rid of the thing that's supposed to produce more, because we call it yo-yoing. We haven't been taught how money works and how to use money and make it grow for us and keep it and have an asset. Because let's look at this. According to her thought, that's old-fashioned, man. It's so horse and buggy, old-fashioned. She got a flip phone mentality when we all dealing with smartphones, we can take pictures and text and email and listen to music. She still got a flip phone mentality. Do you have a flip phone mentality? Some of y'all do. But today I want to show you so you can look in the mirror and look at yourself. Thinkers rule the world. They always have and always will. And thinkers always they feel they're better. Oftentimes they're more richer, because the people that don't think, they just go with the status quo. Now, only reason why she wants to take her 100 out of 150,000, she wants to take 100,000 of her goose money and pay off the mortgage, because she's heard people say, my mortgage is paid off. And that's poor people talk. It really is. Because people that know how money works, as long as you're not paying it and you got an entity or a source that's paying it, it's like you're not paying it. You still have your cake and eat it too. It's being paid and it's going to be paid off one day, and you still have your money. You still have your wealth. Okay? Now, okay, so y'all got that first part of it, right? Drinking some green tea here, y'all. Hot green tea. Okay, so, but she wasn't sold. She says, Robert, I really just want to get rid of this mortgage. I say, well, you don't want to work no more. I understand you don't want to work for the man or the woman or the establishment, but you only want to work for yourself. You only want to go sell some cookies or bake some pie. You don't want to earn money yourself and work for yourself. So I said, you can't start throwing away your assets. You need that money to make money, because you're probably going to live, I don't know, but I had to plan that you're going to live a long time. You're only 62 years old. So I said, okay, let's look at your other assets. Other asset. You have a duplex that's free and clear. I said, let's look and see what the value of this duplex. Oh, this duplex is worth $350,000. You have no mortgage on it. How much is the tenants paying you? She says about $2,500 a month. Okay, I see that. I said, you're not using what you have, but you've been blessed with. You're not using it to the best of your ability, and I'm here to show you. She said, what do you mean, Robert? I said, well, you feel like you got a cash crunch. You don't want to work, but I'm gonna show you how to use what you have. I wish you would go out and just make $500 a month or something, because business owners, are looking for people that got some sense, that are mature at 62 years old, because these young kids ain't having it. Okay, they want to be the boss, and they want it in a short time, and it's just hard to really talk to a lot of them. Okay, so you're a candidate, and a lot of people, a lot of owners, a lot of business people really want you to help them, especially if you got some sense. But you just tagged out. You just say you don't want to make no more money no more. Okay, so what we're gonna have to do is work with what you have. That's all you give me to work with, so I got to work with what you have. I say, okay, so first of all, we need to stop the bleeding. If you don't really want to, because I can take $150,000 that you have, and I can put it in an account that's going to give you $1,400 that'll pay the mortgage, and you don't have a problem. Since you don't like that, I tell you what, you want to just take your $100,000 and pay the mortgage and only have $50,000 in the savings, right? I don't want you to do that. I said, tell you what, since you're 62 years old, there's a strategy called a reverse mortgage. She said, Robert, I heard about that. I don't want to lose my house. I said, come on, where y'all get that from? Nobody don't want no house. They want interest. They don't want no house. They don't want no house. Nobody want to take your house. So I said, just listen to me. Listen to me. Your payment's going to be $1,200 a month because insurance has increased. Price of insurance has increased. You owe $100,000. You're 62 years old. If you do a reverse mortgage, the government got a program, and we'll help you. We'll help you, guide you through it, execute it, get it done for you, look at the paperwork, set it up for you. Okay, that's what we do. A reverse mortgage will wipe out that $100,000 mortgage, meaning that you don't have to pay no mortgage payments. Once you get 62 years old, the government has a program for people just like her, because they don't have a lot of cash flow. They're not getting big pensions. They don't have big 401ks. They don't have a lot of cash flow. And the government don't want to really be, say they need welfare and dealing with them. So the government said, if you have a house, what we'll do is take the mortgage away from you, and you don't have to pay the mortgage until you're dead. I kind of like that. Try to get it from me when I'm dead. That's a good deal. She said, okay, Rob, what do you mean? I say, okay, so your old first mortgage is $100,000. If we do a reverse mortgage, you don't have to have a job. You don't have to have no good credit. All you have to do is prove that you own that home. You have to, that home that your residence. She says, yes, we can do that. So reverse mortgages come in, a government program. They will pay off the first mortgage. Now they will suspend her payment, so she would have no more payments. So now her cash flow is already increased. Only thing that she have to do is just pay for the insurance annually and just pay the property taxes. But that mortgage, the $850, she don't have to pay. She can keep that in her pocket. That gives her some breathing room. She's 62 years old, so she don't have to. She said, well, what happens when I die? Okay, when you die, since you're in good health, we can put in, before you die, we can put insurance on the house, on you, that says, because remember, you saving the mortgage payment. What are you going to do with that? Go out and make it rain? Normally, you got to pay. So you might as well take that and invest in an insurance policy that's going to give you value, cash value, build up. And then one day you're going to die, 100 years from now, whatever, you're going to die. Then the insurance will pay the reverse mortgage people off, and the house is free and clear, and you can leave it to your alma mater, your cat, your dog, your children, whoever you want to leave it to. It's your prerogative. But now you don't have to take your cash to pay off that mortgage. The reverse mortgage will pay it off, and you have no mortgage. All you got to do is just put hurricane insurance and fire insurance on the property so it won't burn down, and you just got to pay the property tax. That's it. That's good, okay? So she said, okay. She said, and I said, but that rental property, it's worth $350,000. It just got money in the walls. I mean, you're getting $2,500 a month. Do you know there is a plan, a strategy they call a no-doc loan? Since you don't work, there's a mortgage where if you're getting income, if the income can pay the mortgage that you put on there, we don't need your tax return. We don't need nothing from you. Because if the duplex is worth $350,000 with no mortgage, and the tenants on each side, it comes to about $2,500 from both. That's $2,500. That's $30,000 a year. Even if she just pulls out $100,000, That's only gonna cost about $700 a year. But she's still, a month. But she's still getting $2,500 a month from the tenants. So that's a win-win. She can pull money out of the walls. Why? And she should pull money out of the walls, because when you have all this equity in the house, what is it doing for you? It ain't working for you. Remember what I said. Money should always be working. You got to ask yourself, how is the money working? How is it working? And let's just say if she said, Robert, I need a car. Remember, if she pulled money out, I don't want her to go pay cash for the car. I'd rather for her to take that 100,000, put it somewhere, and let that interest on that 100,000 pay for the car. See, you got to change your whole mindset. And a lot of people, especially people of color, don't understand this whole reverse mortgage. They think that someone's want to take their house. Nobody want to take your house. This is a strategy. Matter of fact, they teaching this strategy here in Harvard, in Yale, and MIT. It's an advanced strategy. But if you listen to your children or somebody, a neighbor, and the problem is, so many people who don't have a lot of money, the biggest problem is y'all listen to other people who don't have money. How you gonna get advice from Susie or your Barbara or Janie? Girl, boy, I wouldn't do that. How you gonna get advice for somebody who ain't rich? You can't get advice from somebody who not rich. But that's what 90% data say. 90% of people get information and take counseling from other people who ain't got nothing. And ask yourself, do you? Your girl, especially y'all friends, girlfriends, boyfriends. I mean, you gotta look at them and say, where are they to give me some advice? You understand? I mean, you really. So the reverse mortgage is a hell of a. The other thing is, let me tell you something. When you do a reverse mortgage, the property still is in your personal name. You still could sell the house. You can party in the house. You could paint the house. You could do anything in the house. You can do a reverse mortgage. They pay off your mortgage. Next year, next month, you can say, okay, I want to sell this house. I want to move. You can do that. You have control. But what happens is, since you don't have a mortgage, you might say, oh man, I don't have any more interest deductions. That mortgage was providing me with some tax shelter interest deduction. Do you know that if you pay anything toward that principal a year, let's say if reverse mortgage, now you have no more payments, but you need a tax strategy. Let's say if you just pay $5,000 in interest, just pay toward the principal or pay toward the mortgage. You get a 1098 where you can actually deduct off your taxes. Anything you pay toward the reverse mortgage, you get an interest deduction for that on your income taxes. That's pretty good. Because some people say, man, I don't have a mortgage payment no more, so now I don't have any interest deductions when I file my taxes. No, you could, because you can pay into it. You can pay into the mortgage, which bring the mortgage balance down, and then you still get a tax deduction, and you still don't have no monthly payments. So I like it a lot. And there are a lot of people who don't look like me that's using the heck out of this thing. Y'all wondering how this lady, your neighbors, and how they doing it, and how this other people doing it. They ain't telling you. But this is what they're doing. Because let me tell you something. You can't take a house with you. The biggest problem with most people of color have is the children. Because Big Mama, let me give you a case. Here's Big Mama. Big Mama, 86 years old. Big Mama on fixed income. A little small Social Security because she didn't have a pension. Big Mama in good shape, believe it or not. Big Mama had that same kitchen she had for 60 years. Kitchen cabinets falling down. When it rains, it's buckets she got to put in because she can't really afford. The house is paid off, so she don't have no insurance. And she got buckets in every corner every time it rains. Her children, they not saying anything, but they feel when Big Mama die, they're going to inherit that house. So someone like me come along and I say, listen, Big Mama, this house is worth $400,000. Why don't we do reverse mortgage and give Big Mama enough money to fix the roof, to get her a brand new kitchen, and she don't have to pay a dime. They'll just put it on the mortgage. And Big Mama don't have to pay nothing while she's alive. But when she die, the money comes due. No, do you know them children will say, no, she's not doing that. I said, you don't want to give Big Mama some pleasure while she's on the planet on Earth where she can get that nice tile, flooring. She can get a brand new appliances. She get rid of that old refrigerator. The door won't really close. I mean, she can get rid of them old kitchen cabinets. It's going to make her live a little longer. She going to feel good. She going to feel good. You know, I mean, the air conditioning, them walls and in the window and it's leaking. I mean, come on, help Big Mama out. You ain't got to pay it out of your money. The government will give her the house worth $400,000. Big Mama 86 years old. They'll give Big Mama $300,000. She ain't got to pay it. Big Mama can go get her a cruise. She can do a whole lot. She ain't taking the house with you, but y'all so selfish. Y'all will let her live in slum. So when she die, y'all can inherit the house. Y'all ain't gonna live in it and fix it up. Y'all gonna sell it and get the cash. Now that's selfish. That is selfish. If you really love, you would try to give Big Mama some comfort. Okay, you would do that. As a matter of fact, you could do a reverse mortgage for Big Mama, and if she leaving it to two of y'all, you all could actually pay the monthly payment to the reverse mortgage. It ain't no monthly payment, but the deferred payment that they defer, you all could pay that because y'all gonna inherit the house anyway. But no, selfish children, they don't do it. They tell Big Mama, because Big Mama asks you, hey, should I do it, y'all? No, don't do it, Big Mama. Why don't you tell the truth? Don't do it because you want it. You don't want her to live happy and nice now because you want it. You want her to live in a slump or dump, and you want to keep it, and you want to have it free and clear when she dies. I see a lot of that, and it's sad. I mean, the way I'm telling you all, I don't tell it to the family. I mean, I won't be respectful, but I'm telling you all. So you got to look at yourself and see if you have a loved one that you can actually help and bring comfort to. Okay. Now, the reverse mortgage, what I like about it, like I said, it gives you a whole lot of options. Now, one of the things, and you every year when you do a reverse mortgage, the company want to make sure one of the requirements is you have to live in the house. In other words, you can't do a reverse mortgage and have no monthly payments and you duck out and go live with your children and rent that house out. Now you having your cake and eat it too. People do it. Okay, people do it. But every year they're going to send you a letter so you can swear oath that you are still living in that house. Because as long as you live in that house, that's your residence, that's your homestead, there's no monthly payment. I think that's good in terms of retirement and cash flow. You would be surprised. A lot of wealthy people, because you can go up to $2 million, a lot of wealthy people that have a mortgage and they're paying, they would actually do a reverse mortgage so they won't have no monthly payment, and that cash flow they live off and go around the world and travel. And then what they do, since a lot of them, they do it because they're in good shape, they put a life insurance policy on themselves. So when they go to heaven, the life insurance pays off everything back even. But they don't have no cash flow. They're not living paycheck to paycheck. They're using that strategy. I'm telling you, this strategy they're teaching now at MIT, Harvard, Yale. It is an advanced strategy. It's not just for the poor people. No, this is a hell of a strategy. And a lot of times, I'm telling you, the tax code, a lot of these strategies, wealthy people take advantage of it. The poor people, y'all go to H&R Block and y'all talk to y'all barber and y'all beautician, and they telling y'all get advice from them because y'all don't want to go to a certified financial planner because y'all feel that y'all don't have enough. That's why you don't have enough, because you're doing it wrong. You should always seek counseling. Now, at the Henderson Financial Group, you can come to us and have a session, and I'm going to give you some information. Y'all who know me, y'all know I'm going to tell you the truth, the whole truth, and nothing but the truth. That's just the way I roll, because I'm going to treat you the way I would want somebody to treat me. I don't say you ignorant. If you don't know, you're not supposed to know. I'm supposed to know. and then we work as a team and we'll work a strategy. And you always want to look and see, okay, where are my marbles? What do I have? Okay, so back to this case, a 62-year-old. So she said, let her think about it. But I think it's the strategy that I came up with. She don't have to part with her money. She can do a reverse mortgage and have no monthly payment and stay in that house, her primary residence. The value is still going up. She has a lot of equity in her primary residence. Okay, she could take some money out. Or you can just pay off the mortgage. Reverse mortgage say they can just pay off your existing mortgage or pay off your existing mortgage plus give you some extra money that's equity in there up to 80%. I mean, they really, it's a hell of a strategy. Don't be afraid. I gotta tell you, none of us can take none of this stuff with us. All this stuff from the car to the house is borrowed. So you worried and freaking out over some material thing and high blood pressure, you don't know the truth. You really don't. Aaron, what you say if Big Mama health fails and needs to go to a nursing home, will she be penalized for not living in the home? And now that's an excellent question. That's an excellent question. They don't want if Big Mama has to go to a nursing home. Matter of fact, I had a case like that. If Big Mama go to a nursing home, first of all, it depends on if she has money, she don't have to go to the nursing home. But if she didn't have money and she wants to go to a nursing home like a Medicare, and she says she don't have, and she wants the government to take care of her, the government wants that house. Okay. So what we try to do, I just had a case where her brother actually bought the reverse mortgage from her because they had a lot of equity. But yeah, you're right. If you're not residing in the house, because they think that if you're not residing in the house, they think that you're going to let somebody else reside in the house and then you're going to profit while you have no monthly payment, and then you're going to profit from rent. The government says the reverse mortgage is to help you in your cash flow. But if you're living with your sister, a nursing home, your brother, your children, then they helping you. So the government says, okay, give us our money. So that's a very good question. If she has to go to a nursing home, then yeah, because you need the asset. Then you have to void or turn in or even sell. But if she had to go to a nursing home, who's going to get the house anyway? The house is going to be vacant. You can sell the house because then you can sell the house if she's in a nursing home and then you can get the equity. You can do that. I like that strategy. Remember, the reverse mortgage main thing is for you to live comfortable in your home without stress, without having to pay mortgage and be up to here living paycheck to paycheck or on fixed income, especially with taxes going up and insurance going up. Oftentimes when you have a mortgage and the mortgage, the principal and interest is fixed, the mortgage goes up because of the property taxes and a homeowner's insurance tax. So if you escrow, remember, and when you pay for a mortgage, most of the time, 90% of the time when you pay off, you have a mortgage payment for a home, it's 4 components. It's the principal that you're paying on, and it's the interest that you're paying on. That goes to the bank. The third part is the insurance. Now, why they put it in one payment? Because the bank who lent you the money, they don't want to trust that you paying for that homeowner insurance. You may say you have insurance on the house, but you may be lying. And then the house catch on fire and it wasn't insured. So the bank said, no. We going to pay the insurance for you. And then you pay it back to us monthly. We're going to pay it annually. That's what the bank says. And then you pay us back monthly. So that's why it's part of the monthly payment. And then the taxes, no, the only one who can take your house other than the bank is an HOA. They can take your house, homeowner association, foreclose on you, and the taxing authority in your municipality. If you ain't paid in 3 years, it's different states are different. But if you ain't paid, they can take your house and foreclose. So the mortgage company say, hey, I just lent you money on this house to buy this house. We're going to control everything. Not only the principal and interest that you got to pay us for our loan, but we're going to control the taxes and the insurance. We want you to pay us, and we pay, the insurance people, homeowners insurance people, and we pay the property taxes. But that interest and principal is ours. Okay? So that's why it's 4 components for the average mortgage on a property. Okay. Um, so do I like a reverse mortgage? And I like it for its leverage. I like it if you treat it right. I like it even more if you can get a reverse mortgage and you still insurable. I really, really like that because then you can have your cake and eat it too. You can live because listen, they didn't teach this to us when we was coming up. It's when you retire and you get tired, it's all about cash flow, baby. It's all about, it ain't about stocks going up and stop going. It's all about cash flow. How much is going in your bank account guaranteed every month? That's what it's about. That's wealth. How much is going? If they would have taught us when we was coming up, instead of saying, "Hey, everybody, we in the first grade, second grade, 10th grade, man, we want to be rich when we get older." No, they should have been saying, "No, what you need to do is as you earn money, learn where to put your money where it works for you, because you want your money. You want to trade places with your money. People work, you labor work. That's okay when you starting off, but you're working to get the money because the goal should be have the money working while you chilling. Now the money working. That's big pimping there, man. That's big pimping. The money working for you. You know what I mean? I mean, I shouldn't use pimping, but y'all get the message. y'all get the message. The money working for you, not the girls, but the money working for you. And so, but a lot of people take their money and give it away. I know this lady, I tried so much. I tried so hard. The lady school teacher, I tried. Listen, I tried. My biggest problem, I'm telling you, my biggest challenge doing financial planning is convincing people to love themselves and protect their money. That's my biggest problem. Because this lady just retired. She just couldn't wait. Her biggest thing, she's a school teacher, was a Range Rover, and she had to get a brand new one just right from the factory. $70,000. She had to get it. $70,000. She didn't have $500,000. She didn't have $300,000 when she retired. They didn't give her that. She wanted to take $70,000 to drive around. And I said, okay, listen, I got to do something, man. Because I take it personal. I said, okay, I'm gonna find that same Range Rover. It's gonna be 2 years old. I found one, same color, same make, same model. It's 2 years old. It still smells new. It only has 10,000 miles on it. You can get it for $39,000. Nobody will know outside. They're just gonna see you in a new Range Rover. They all look the same. Well, not all of them, but that model you have, that model you're getting for 2022, it looks just like the 2020. Same color, white on white. The one you're gonna pay $70,000 for? Here's a company right here. You can get it for $39,000. Save you some money. Do you know what that grown woman? Now she ain't 16. What that grown woman said, 60 years old. She said, "No, Robert, I want it brand new." For who? If it's 2 years old and it's only 10,000 miles, it still smells new. Especially got the warranty on it. Got a 5-year warranty, parts and everything. So what? You gonna save money because you ain't getting ready to work no more, and you're 60 years old. You might live till you fucking 85, 90 years old, and the cost of living going up. You need to have your money working for you. Couldn't talk into it, y'all. Nah, sometimes I fail. I mean, because they grown people. I can only give advice. Now, I know sometimes you all try to talk to people and say, "Hey, come in as a financial group, get yourself together," and they don't hear you. Everybody not gonna get to heaven. Everybody have ears, but everybody don't hear. Everybody got eyes, and they still don't see. That's what the good book mean by that. Having ears and still can't hear, having eyes and still can't see. A lot of people are like that. Okay. I thank you all for tuning in, listening, and watching, because this is a sign of wisdom. Anytime you can get a new thought, a new idea, because them old ideas haven't gotten you anywhere. So you want something new so you can say, So when I look back at being 64 right now, I look back, how did I get here? What was my thoughts? And I examine my path a lot. That's why I can come up and say, man, if they would have taught us about cash flow. See, cash flow is the thing. Wealthy is better than rich. Rich, you could be rich today and poor tomorrow. You can ask a lot of entertainers, athletes. They were rich. They got cut, got hurt. Now they school, they broke, living paycheck to paycheck. They was rich. A guy had a hit record. He was rich. He ain't rich no more. Wealthy is something, boy. That's a good thing. Wealthy, let me tell you what wealthy is. Wealthy is when your fixed overhead expenses for you to live and eat and take care of yourself and be comfortable. Let's say it's $7,000 a month. But you done set things up where your money bringing you $10,000 a month without you even getting out of bed. Now that right there is wealthy. That's the plan. We should have been working on that when we was in our 20s, 30s, 40s, 50s. How can we get to a point where all the work that we done physically dealt with traffic and dealt with the people, how can we take our marbles and put them in assets that are going to work for us? Big pimping. That's the mindset. Stop all this crypto and getting rich and come on, man. And stop all this going on these podcasts where these fools telling you can get rich for nothing. Ain't nothing changed. It's the farmer mentality. You got to plant in order to reap a harvest. You can't just get a harvest unless you violate. You can try to steal one, but they going, man, they trying to put you in jail. They trying to give you a felony. They trying to give you a felony. You know what a felony is? That some of y'all know. Give you a felony where you can't get no government assistance, no nothing, no job. And they got to set up where all the companies say, oh, you want a job? Oh, let's see if you got a felony. Oh, you got a felony? Oh, what you do? Jaywalk? Oh, you got a felony jaywalking. Oh, you can't get no job. Come on. The thing, you got to, each and every one of us, we got to start taking care of our health because they trying to kill us that way. Take care of your health, man. Exercise. Do something, man. Walk. Get up. Stand on one leg. Do something. Exercise and try to get as healthy as you possibly can because health is your wealth. Because that hospitals will take your money. Yes, and you ain't got nothing to say. All right. They will take your money. All right. Got any questions? Anybody got any questions? Did y'all learn anything about reverse mortgages? Because I don't want y'all to just get it from y'all cousins and y'all friends and all that. Are y'all learning anything? If you learn anything about reverse mortgage and what I just told you about the story, put a 1. Post a 1. Let me know if you learned something about reverse mortgage. Now, you should consider this and give us a call if you're 62 or over. Got to be at least 62. And see how you can still have your house. Maybe you can still sell it. You just suspend your payments. That's it. So you really want to try to get to 62. Because you can have your house, rent it, sell it. I mean, you can't rent it. You got to stay in it. But having no monthly payments, that's big, and especially retirement, And what do you think about when I told the young lady, I said, listen, since you refuse to work and you ain't sick, that paid off duplex, you got equity in it. Don't just sit there with your pride and joy and have it paid off. Since the tenants are paying you $2,500 a month, don't just have money in the walls. Money in the walls don't earn you nothing. Listen, when you have money in the walls of a paid off property, you're getting less than what the bank give you. Because let me tell you something. Money when it comes to real estate values don't go up because you don't have no mortgage. Real estate values go up based on the appraisal. That's it. The appraised value. If you got a piece of property right here and 2 houses in a row, 2 properties going to foreclosure and they sell them for a little high price, you ain't do nothing. The value of your property will come down. You have no control. Okay? So real estate, and when you have it paid off, it's a misuse of wealth. It's a misuse. Plus, it's an illusion because you can't touch it. You don't have it. It's a psychological Jedi mind. You ain't working with it. I found that a lot of people, really become affected about things that ain't really real. You can't really touch or feel. They really, really get affected. You know what I mean? Like let me give a perfect example. Okay, I got another 8 minutes, and I'm gonna talk about this economy. I've been doing this over 30 years. This is the first time that I've seen the government do a artificial recession. Let me tell you what an artificial recession is. Not even a real recession. They're inducing labor. They're inducing a coma. They're inducing a recession. They say we gotta have a recession. Now, why we gotta have a recession? You know what recession is? When people get laid off their job and money is tight and people can't hardly deal. They said right now, the Fed said that they have to, and they're gonna keep on raising interest rates because they got to induce a coma. They got to reduce hard time. They got to induce hard times. Because they said, now we know that a lot of businesses, small business owners, going to go out of business, and we know a lot of people going to lose jobs. But we need that for the good of the whole economy. No, that's like being in the military, and the generals tell you and your squad, listen, I want y'all to go down to the east. I want y'all to, about 500 of y'all go down to the east side, go that way, because 1 million of us going this way. But we need y'all to be a decoy. Now, y'all got to take one for the team. Y'all gonna run into enemy territory. Now, the generals know they're gonna get killed. They know that. But they want to use them soldiers to get killed for the good of the country, because 1 million people going there. So we can sacrifice a small amount of people for the greater good. Did y'all get that? They do it in drug deals all the time. A drug dealer from Colombia, they may send $100 million worth of drugs on the West Coast and get all attention. Matter of fact, they'll even call the Coast Guard. Hey, I got a tip. There's $100 million worth of cocaine coming on the West Coast. That's because $1 billion coming on the East Coast, and they need to do a distraction. Y'all got what I'm saying? Okay, so let's go back to recession. So here it is, inflation, the cost, food, clothing, everything. Restaurants still full, and people still buying. People still going and still spending, and merchants still keeping their prices up. Everything is up. Oranges up, food up, bread up, eggs up, everything up. Everything up. Popsicle up. popsicle up. The ice cream, everybody piling on. Everybody who don't have to take their stuff up, they just taking it up anyway. Bread, paper cups, everything up. Everybody just piling on. Like, when a hurricane comes, the water price go up, everybody just gouging. So the Fed says, okay, since everybody keep on taking their prices up, this is hurting people. People are complaining. We got to get a hold to this. What we're going to have to do is raise interest rates to make business owners lay off people, because it's going to be hard for business owners to function, because we're going to make money so tight, the money supply. We're going to make it tight for business owners. And when business owners make it tight, they're going to have to lay people off. And if you lay people off, there's going to be less people going into Macy's, going into Dillard's, less people buying online. Less people going into the restaurants. And to the restaurants and all them people, what they got to do? When ain't nobody coming in, what they got to do? They got to put everything on sale. They're going to drop the prices. Supply and demand. See, if there's a lot of demand, then that means that the prices go up. But when demand, ain't nobody wants your stuff, you got to start selling it on sale. So the government says, okay, so we put enough people out of work. Some business owners going to go out of work too. Not the rich people, not the fat cats, not the people who this ain't going to affect. In fact, they're going to get richer, because when prices go down, they already got money. They can buy cheaper. Isn't that something? Yeah. Hey man, what can I say? What can I say? That's the capitalist society. That's the society that we are. So right now they're saying 23 going to be a hell of a rough year. And they're saying, listen, you should hold back on big purchases. Anything that you don't necessarily need Just kind of wait. Right now, we're at a pivotal point right now. We kind of like pivoted. I don't know if they're going to wreck this economy and just wreck it, or they just talking or whatever. I've been around doing this for a long time, but that's what they actually saying they're going to. In other words, they're saying the boogeyman coming. We the boogeyman coming. That's what they're saying in 2023. So I don't know. Look how they did. Y'all just seen this weekend with the stock market just dropped it 1,000 points, and then just dropped it. Good companies. Ain't nothing wrong with the companies, but they just said just sell them because take money out of the stock market. A lot of people sell the stocks because they're afraid. I'm telling you, the rich. I've never seen a time where the rich didn't get richer. They control the economy. You just got to understand what's going on. You got to stick and stay in terms of longevity. You can't freak out. You can't lose your cool. The most important thing, you got to call the Henderson Financial Group and stay in touch so we can tell you exactly what's going on, how to play it. The game of life and how to play it. You need to know, you need to understand, you need to have counseling, you need to have a friend, you need to have somebody who can explain this stuff to you and break it down to you like you're a 6-year-old, okay? About a whole lot of things. Ask yourself before you make a move, is there a better way to do what you want to do? That's all you got to do. And then call the Henderson Financial Group and say, I need to talk to Robert. I'm looking at doing this. Is there a better way to do it? That's all you got to do. That can't hurt you. Always get good counsel. Always ask, listen, is there a better way? Is I missing something? Is there something, a strategy that I don't know about that can be better? That's all you got to do. We're here. You can't call Fidelity for what I'm telling you. You can't call Vanguard. You can't call other companies. You can't go to the bank. You definitely can't go to a bank and sit with one of them little people. They don't know A from B. So you need good counseling. Somebody who's been doing this over 30 years. I'm going to tell you. I'm going to tell you because I get my blessings. Every time I help you, the Creator, which are in heaven, says, Robert, I'm going to give you more knowledge, boy, because you're doing a good job and you helping a lot of my people who I send you. I'm going to make you smarter and smarter. So y'all keep on coming because I'm going to keep on giving because I done figured out I got a plan. I know the formula. The more y'all come, the wiser I get because the Creator opened up my whole mind. I meet people. I just met an attorney, man, that this guy, I'm going to use him. And this guy, he's real. He can talk. And it's about those living trusts and not only, because I had a client that bought a property and he's in the entertainment field and he don't want y'all to look in some bids and see that he owned that property. So I told him about a land trust. That's like invisible. When you do a land trust, that's what Disney used when they wanted to buy property in Orlando. And people say, oh, Disney buying this property, and they start raising their prices. Disney say, okay, let's do a land trust. A land trust is like an invisible trust. You don't know. Your personal name is not ownership, so nobody know you own it. So this entertainer guy who's a client of mine, I said, listen, what we're going to do is a land trust. He said, what's a land trust? So we had a meeting and broke it down to him. Then I found an attorney who can execute it really good. See, stuff like that. That's what I mean, man. You got to understand. Sometimes you want to be incognito. You don't want everybody to just go to some business and look at your stuff. There's a way that you can still do it and have your cake and eat it too and accomplish your goals. There's a lot of things that you don't know that you didn't know you didn't know. And that's what I pride myself on, getting this information. Because I'm like you. I want to know. But I love doing this stuff. Listen, it's 10 o'clock. I hope you all enjoyed today's session. I hope you learned something. But I want you to call 305-825-1444. That's the telephone number here, 305-825-1444. And you can set up a conference call and say, listen, I just want to know if I'm doing some things right. And I just want to talk to you and just, tell me is there a better way? And I got some kids, and I want to put some money away from them. And what do you think? And I got, a wife, or I got a grandmother, I got a mother, and, I got an elderly parent. Let's just have a conversation. It's good to have counseling like that, all right? But listen, time is running out. Listen, y'all have a wonderful, wonderful, wonderful weekend. Be safe out there. I hear that virus and people still getting COVID out there. So really protect yourself. And hey, I love you all. Take care. See you all next week. All right. Peace.